Welcome, dear traders. As a rule, when the prices of oil, gold, and the futures of the major Wall Street indexes are falling, one or more safe haven assets are rising. Today, most stock indicators also went into negative territory in the Asian session. Japan, China, and the antipodian countries saw their stocks decline at the beginning of Tuesday. Meanwhile, a fresh spike in the US Treasury yields snapped Asian stock markets, multi-session winning. US Treasuries were back in demand, with the benchmark 10-year US Treasury note once again piercing the 4.6% yield threshold. In addition, markets will once again focus on the Fed speakers. Fed Chairman Jerome Powell is scheduled to speak tomorrow, and today there was a hawkish statement from Minneapolis Fed President Neel Kashkari. For example, the policymaker warned that the regulator probably had a lot of work to do to curb inflation. Member of the Federal Reserve Board of Governors Lisa Cook noted that the central bank's policymakers remained vigilant to ensure that the inflation target is met. Fresh comments from top U.S. officials have brought a sense of uncertainty back to the markets. It's likely to last until tomorrow when the Fed Chairman Jerome Powell speaks. Meanwhile, traders should refrain from going short on the major currencies. As long as the U.S. inflation remains above the 2% target, the Fed keeps the door open for a rate hike, giving the US dollar a chance to strengthen. These two factors, supported by Treasury yields, favored the US currency. The US dollar index broke away from the minimum levels of last week and broke through the resistance of 105.5 points. As we can see on the chart, the previous decline turned out to be unstable, and it's too early to say it's over. Although the US dollar is in a bearish trend, its price stabilized and grew within the daily range of 105.00 and 105.60 today. In the case of further strengthening, the US dollar index may rise to last Friday's intraday levels, reaching 105.90 and higher. The dollar-yen pair also rose to the intervention area as the greenback soared. Driven by the US dollar bulls, the yen was near 150.5 by the end of the Asian session and continued to trade higher. Monday's price range shifted higher on the chart, and the pair was trading in the range of 149.80 and 150.50 on Tuesday. With the more hawkish comments coming from the Fed, the yen's decline may accelerate in the coming days. The dollar-yen pair is likely to find resistance at 150.90 near the 2023 high of 152 points. On the other hand, peers may bring the pair back to the psychological level of 149. As for the Japanese economy, the reports released today confirmed the weak position of the national currency. As we mentioned in yesterday's review, the Japanese regulator sees 2% as a target level for wage levels. The fact is that a weak yen is very profitable for the business abroad, but it's very painful for the households in Japan. The authorities see the main solution to this problem in raising wages. As the latest statistics show, the level is rising but a slow pace and not high enough. In September, average cash earnings rose by 1.2%. Moreover, its growth lags behind the core consumer inflation rate of 2.8%. In other words, inflation-adjusted real wages in Japan have been falling for a year and a half. The Japanese authorities continue to pursue its ultra-loose monetary policy, leaving the yen defenseless against the US dollar. However, aggressive action by central banks does not guarantee that their currencies will strengthen against the almighty US dollar. For example, the Reserve Bank of Australia decided to raise its key interest rate to 12-year high of 4.35% today. After keeping rates unchanged for 4 consecutive meetings, such a decision by the Australian regulator was quite predictable, as inflation in the country had been rising. However, the Australian currency declined against this move, and rising US Treasury yields and the US dollar. In early Tuesday trading, the Aussie slumped from its 3-month highs and depreciated to 0.6420. The currency finished the Asian session consolidating within the range of 0.6420 and 0.6505, hovering in the bearish area. The New Zealand dollar followed its Australian counterpart and lost some of yesterday's gains. The Kiwi closed the Asian session at 0.5950 and continued to fall within the range of 0.5915 and 0.5972, testing the support level of 0.5918. The outlook for the Kiwi dollar pair continues to support the bearish trend. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below. And see you soon.